Yes, let's begin the chart revision of different types of entities. So in this, first we will discuss about, cooperative societies. First we will discuss about cooperative societies, which is most important, audit of cooperative societies. Cooperative societies are broadly two types: normal cooperative societies and multi-state cooperative societies. For multi-state cooperative societies, Multi-State Cooperative Societies Act 2002 is applicable. For normal societies, Cooperative Societies Act in 1912 is applicable. Yeah, this is the last topic. Cooperative societies audit is the last topic in different types of entities. Fine. Now, so what is the role of the auditor in cooperative societies? This itself can be asked as a 3 marks question. He can guide, he can do system installation, he can do internal audit, he will provide management accounting services, he will give taxation services and guidance on accounting practices. Guide means nothing but guidance on accounting practices, all that. And next, audit of cooperative society. Registrar or authorized person must audit at least once a year. Registrar will directly audit, or any other person authorized by the registrar. Scope, he will examine overdue dates, assets, liabilities, all that. What and all he will examine, we have at last. Okay, next, the auditor or registrar has rights. Registrar or authorized person has the following rights: access to books, accounts, right to require information from auditor, all that. Who will be appointing the auditor? Registrar will appoint, and registrar is the person appointed under the act. Next, then we have some discussion on multi-state cooperative society. What is a multi-state cooperative society? If a society whose objects extends beyond a single state, then it is called as a multi-state cooperative society. And remember, a multi-state society funds cannot be used for political purposes. Next, books of accounts. They must maintain books of accounts for money received and expended, assets and liabilities, sales and purchases, cost in case of manufacturing societies, cost records. Next, qualifications and disqualifications. Qualifications, only chartered accountant can be appointed. For a normal society, no, the auditor can be a diploma holder who has a diploma in cooperative accounts. That can be, he can be auditor for a normal society. But for multi-state society, just like a Companies Act, chartered accountant in practice. Disqualification, body corporate, officer or employee, member of the society, or employee of officer or employee, or a person who is indebted or guaranteed or security has given for an amount exceeding 1000 rupees, he is also disqualified. Next, and if at all after appointment auditor became disqualified, he is deemed to be vacated the office. What is the tenure of first auditor? Till first AGM conclusion. First of all, appointment, first auditor will be directly appointed by board of directors within 1 month from the date of registration, or general meeting if board of directors fails. Subsequent auditor, members at each AGM they will appoint. Yes or no? The tenure will be till first AGM. Subsequent auditor's appointment will be valid up to the next AGM. Next, powers of the auditor: right of access, right to access to books, documents, voucher, inquiry and information of the officers, employees of the society. Duties: first and foremost, he has to give a report. Second point, you see, he has a duty to report on accounts, examine whether balance sheet, P&L give true and fair view. Then he has a duty to make inquiries. 4 inquiries: inquiry into loans and advances, whether security is there or not, terms are not prejudicial. This is something like 143 subsection 1. 6 inquiries are there, right? Here only 4 inquiries were there. Okay, so whether book entries are they not prejudicial, personal expenses, ensure that they are not charged to P&L, if any shares are allotted for cash, whether cash is received or not, if not, balance sheet position is correct or not. Then duty to state certain matters. This is like a checklist item. Okay, state whether necessary information obtained, say whether proper books are kept, say branch reports are received or not, say whether financial statements are matching with books, state, and for any negative comments, you need to give reasons. Next, and there is a concept called special audit in multi-state cooperative society. When special audit can be audited, if society affairs are not conducted as per cooperative principles or prudent practices, or society's affairs are likely causing injury, or society's solvency is in danger. In all these 3 circumstances, special audit can be ordered, provided central government or state government should hold more than 51% of the paid up share capital of that society, which means it's a government owned cooperative society. Only for them special audit can be ordered by central government. Now, who will appoint special auditor? Central government will appoint. Powers of the auditor will be same as normal auditor. Yes or no? And government will take action within 4 months of the submission of the report. If no action is taken, they just send the report to the society. Yes or no? Expenses determined by government, paid by the society. If at all society is not paying, it is recovered as an arrears of revenue. Easy. Then apart from that, government has a power to inquiry or power to inspect society affairs. Okay, when the affairs can be inspected, who will apply eligibility? Eligibility nothing but application by. Application will be by whom? Either creditor, or 1/3 of the board of directors, or 1/5 of the total members. Any of them can apply for inquiry or inspection. Then application will be to central registrar. Inquiry by whom? Either registrar himself or the authorized person. Correct? Notice, you must give 15 days prior notice before you initiate inquiry or inspection. Then powers, access books, documents, properties. He may call general meeting also with a 7 days notice, can call meeting, yes or no, and can issue summons, examine under oath. Next, report. Central registrar communicates the report within 3 months to the society and the applicant. See how crisply it came. Every point is covered. Next, then there are some special features in audit of cooperative society, and yeah, special features. One of the important thing is overdue debts. Society debts will be classified into two types: 6 months to 5 years and more than 5 years. Overdue debts. Comparison to the total working capital. How much is the total overdue debt divided by total working capital and compared to the previous year. You need to assess whether they are good or bad and see that adequate provision is maintained. And overdue interest. Interest accumulated on overdue debt. Nothing but those debts which are overdue. On that whatever interest is there, this is nothing but interest on NPA in the context of bank. So that is overdue interest. Overdue interest will not be recognized on accrual basis. Yes or no? It is excluded from interest recognition. It is directly credited to overdue interest reserve. In case of bank, no, interest on NPA is recognized in memorandum account. Here it is credited to interest credit reserve. And then finally it will be transferred to P&L only after realization. Correct? Next, bad debts. You know, auditor authorization is required in some state tax like Maharashtra, like that. Otherwise, managing committee authorization is required. Next, valuation of assets and liabilities is a normal one. It's a normal one. No specific point for the society. Adherence to cooperative principle. This is something specific. Auditor has to check functioning of the society aligning with the objectives and for the benefit of the members or not. Ensure proprietary principles, economy maintained or not, no wastage, no direct purchase. I mean, and society has to purchase directly from, you know, suppliers by eliminating middlemen, all that. Next, an auditor must verify non-compliances with the act and rules thereunder. An auditor has to give a special report to the registrar. This itself can be asked as a 3 marks question, most observation. So auditor has to give a special report where he will report irregularities, he will report like a personal profiteering by the managing committee, fraud management, fraud, mismanagement, reckless advances. All these cases auditor has to give a special report to the registrar. Next, the auditor has to verify members register also personally in some cases, especially rural areas. Yes or no? Next, audit classification. Auditor will assign a class based on registrar's criteria. Management can appeal to the registrar for the class awarded by the auditor. And remember, before you give a final audit report, you must discuss a draft audit report with the committee before finalization. Finally, the last one, special issues in cooperative society. What are the special issues? Special issues in cooperative means normal society. Qualification: CA can do audit, or a diploma holder or experienced person as per state act can do the audit. Yes or no? Appointment: auditor is appointed by registrar. He will act on behalf of registrar. He will report both to the registrar and society. Fees will be decided as per the scale, statutory law. Next, state government prescribed books of accounts, subsidiary books, all that for all large societies. Next, restrictions on shareholding. Maximum a person can have 20% of the total shares, or maximum face value 1000 rupees. Only whichever is lower. Next, restriction on loans. Only to members a society can give loans unless registrar approves. Next, restriction on borrowing. Society can accept loan from any members provided bylaws permit it. Next, investment. Society, they have many options, like they can invest in another corporate society, or they can invest in banks, or they can invest as per Indian Trust Act, or they can invest in shares and securities of limited liability societies, not companies, remember. Okay, central government or state government permitted areas, these and there and all society can invest their surplus money. Appropriations of profit. Society must transfer a prescribed percentage to reserve fund before distributing dividend. The transfer to reserve fund must be before dividend. And contribution to charitable purpose. Maximum 10% of the net profit after transferring to reserve fund. Profit calculate after transfer to reserve fund. After transferring to reserve fund, calculate the profit. On that maximum 10% only they can contribute to charitable, that too with registrar sanction. Next, and how reserve fund can be used. Reserve fund can be used for working capital purpose, investments purpose, public purposes. I mean for promoting objectives of the society. For that, any of these purposes. And society can also contribute to education fund, and contribution to education fund is treated as a charge on P&L, MCQ, correct or incorrect based MCQ, for that important. And other appropriation, so transfer to other reserves, dividend after general body approval. GB refers to general body, nothing but managing committee approval. Accounting entries after general body approval. Auditor must spot contradictions between statutory provisions and accounting principles. That's it. Corporate societies concept is completed. Are you clear? Yes, all of you? Yes, that's it. Just a minute. Now let's continue discussion on government audit. Just now we completed society's audit. Now government audit. So government audit, background of government audit. What is it? You know, dates back to organized governments, evolved with political, social, economic purpose. What is the purpose of government audit? It ensures executive accountability for public revenue expenditure. Parliament or state legislatures, no, they will control spending via demand for grants. Expenditures required approval by parliament or legislatures. Funds will be from Consolidated Fund of India, all that. Article 266 talks about Consolidated Fund of India, where the fund includes all collections from taxes, loans and loan repayments. Yes or no? Then, and even in this government audit, no, we incorporate standard auditing practices, new audit concepts and all were evolved. That's it. Then, meaning and objective of government audit. Definition. There is a definition on the UN handbook. It's an objective, systematic, professional, independent examination of public entities' financial, administrative and other operations, which is conducted after execution. Yes or no? It involves reporting findings, conclusions, recommendations and expressing professional opinion on financial statements. Objectives: ensuring public accounting of government funds, appraisal of government policies. It's a base for corrective actions by supervisory officials. So administrative accountability, ensures accountability. The government audit is administrative accountability indirectly. It ensures accountability, but it is not an investing agency to identify all irregularities. It combines accountability to the legislature with aiding administration. In India, this entire audit is conducted by Supreme Audit Institution called C&AG and through a department called IAAD. C&AG verify compliance with constitution, laws, rules and orders. Next. Legal framework around C&AG. So what is the C&AG legal framework? It is he is appointed by president, removable only like a Supreme Court judge, like proven misbehavior, incapacity, 2/3 majority in the both houses, then only he can be removed. Salary determined by parliament and cannot be varied to disadvantage after appointment. Administrative powers are always with president. Constitutional 149, duties and powers defined, duties and powers of C&AG. 150, form of accounts prescribed by president for central and state government establishment. 151, reports submitted to president. So no, 151 says audited accounts and reports has to be submitted to president in case of central government companies, governor in case of state government companies. Correct? Then tenure, fixed tenure, just like a Supreme Court judge. Next, duties of C&AG: compiling and submitting the accounts, providing information and assistance to the government, general provisions relating to audit. He will do audit of receipts and expenditure. He will audit grants of loan. He will audit receipts. He will audit stores. He will only audit government companies. This is the role of C&AG. Now each of this is given as a separate discussion below. Next, what are the powers of C&AG? He can inspect accounts under what are all government officers. He can inspect accounts. He can access documents, books. He can put questions and observations, and he can dispense with detailed check and apply limited check. That is his choice. C&AG can go for detail checking, or he can dispense with the detail checking and only do test checking. Next, audit of government expenditure. So audit of government expenditure covers 5 principles. 1, audit against rules, audit of sanctions, audit of provisioning of funds, propriety audit, performance audit. Audit against rules. Here we check whether expenditure is matching with statute, rules, regulations. We will check consistency with laws and regulations. Sanction, ensure expenditure is covered by proper sanction. Nothing but is the expenditure approved or not. Then ensure fund provision exists and expenditure does not exceed appropriation. Once expenditure is sanctioned, it's like a sanction limit. Then provisioning of funds means like a drawing power, in order to understand in the best way. Sanction limit and drawing power is decided based upon the rules. That is nothing but audit of rules and regulations. So audit of rules and regulations means the law under which expenditure is permitted first of all. Then you will sanction. Then you will allocate the funds in a particular bank account. From there only it will be withdrawn and then spent. Then in a government audit, we need to focus on propriety element, ownership, propriety means ownership, propriety element, where the auditor objective is to identify improper expenditure, avoidable expenditure, even rules are compliant. Like expenditure may be incurred as per the rule, but it is still wasteful. Next, performance audit. In this performance audit, we mainly focus on whether programs and schemes are running economically and are they achieving expected results. Next, proprietary audit. Objective, identify improper, avoidable, wasteful expenditure. Here we evaluate reasonableness, faithfulness, and economy of the expenditure. Correct? The following are the general principles. It is basically common sense. There is no precise rules, but there are some guiding factors for proprietary principles. Is it reasonable? Like a prudent ordinary person, how much he will spend, that much only government official also should think like and should spend like. There should not be any self benefit. Authorities should not sanction for benefit of their own. No partiality. Public money should not be used for any particular purpose, particular section of the or particular community. However, some exceptions were there. If the amount is insignificant, not an issue. It is legally enforceable, no problem. It is as per accepted custom, no problem. Or allowances has to be regulated so that it is not a source of profit to the person who is authorizing it. And the expenditure shall be transparent, shall pass down to the beneficiary. Yes or no? It should only be compensatory in nature and not a profit. Then performance audit. Objective. Performance audit ensures programs and schemes run economically and yield expected results. Objective examination of performance, identify opportunities for economy. Components: efficiency, economy, effectiveness. Efficiency between goods and services produced and resources used, the relationship. Economy, whether the resources, human capital, financial resources, are they acquired economically. Effectiveness, ultimately the program is achieving objectives or not. Procedure, identify the topic, preliminary study, planning, execution, and reporting. Remember, we have in CA final something called PSU audit chapter. Their in-depth discussion will be there on performance audit. Okay, next, audit of government receipts. What is the objective of audit of government receipt? Ensure that there is no leakage of revenue due to government focusing on general, it mainly focus on general revenue collection with the specific checks on how assessment is happening, collection is happening, and refunds are happening. What aspects we cover? Assessment and realization. Verify correct revenue assessed and crediting. Rules. Ensure effective systems for collection. Identify irregularities like frauds, double refunds. Implementation. Confirms proper execution. Review. Also, no, some income tax department assessment orders will be there. Review assessment orders for effectiveness in tax assessments. Extent of checking determined by C&AG involves test check and sampling mechanism. It includes audits by auditor, supervisor checks, and group leader will be oversighting it. And planning and monitoring managed at middle and top audit level, central and local audit conducted at central level and local, the departmental level. Next, audit of stores and inventory. The objective is ensuring that purchases are sanctioned, made economically and according to the rules. This is part of audit of stores, is a part of expenditure audit. Now, what aspects I will cover? Regulations for purchases, custody, and management of the stores. See that reasonable pricing, match contract quantity. Economical purchases, identify uneconomical, huge quantity purchased, losses like that. Accuracy, whether receipts, issues, balances are they maintained correctly. Idle or excess inventory. Valuation, physical accounts tally with value. Next, concept of commercial accounts. Government entities are multiple types, like the departmental enterprises, like commercial operations, department regulations, post office, Indian Railways. These are all departments. Statutory corporations like LIC, GIC. Government companies like BHEL, HPCL, BPCL. These are all various types of departmental entities. And maintenance of accounts are based on commercial basis for the following types. Departmental entities, they are audited just like any other department, government department. Directly C&AG will audit. Statutory corporation, audit nature depends upon the statute. C&AG may conduct financial audit or compile accounts also for them if at all required. Government companies, it is governed by Companies Act. C&AG will conduct supplementary test audit, performance appraisal, issues directions. Audit board mechanism for performance reviews. Now, role of C&AG in government, in government companies, they appoint the first auditor and they appoint the subsequent auditor. They direct the auditor on manner of audit. These auditors submit a report of copy to audit report to C&AG. C&AG has a right to conduct supplementary audit within 60 days of receiving the request. The supplementary audit can be performed by the same stat auditor. C&AG comments sent to C&AG, whatever on audit, supplementary audit, C&AG will give comments. That comments will also be sent to members and they will be presented at AGM. It is an extension of original audit. C&AG has another power called test audit if necessary, conducted by C&AG directly. Like this, statutory audit by qualified CS plus supplementary and test audit by C&AG. In this way, there is a 2-layer audit system. Next, C&AG, they will combine government and commercial audit principles, and focus on autonomy, accountability, and focus on 3 E's. These are the standards that they will follow when they are doing audit, test audit, performance audit, all this. And finally, reporting procedure under government audit. You know, any audit effectiveness depends upon reporting findings to proper officers. Rights and obligations. C&AG's right is inherent and safeguarded by Constitution. Reports are submitted to President or Governor as per Article 151, and the reports will be published in C&AG site also. In our audit EO class, I showed C&AG site, all that. And factual reporting will be done. Conclusions will be left to the users so that total objectivity is maintained. C&AG reporting is always factual in nature, generally. That's it. So with this, government audit concept is also completed. Exactly 10 minutes it took. Then audit of local bodies. This is also something like government audit only. Okay, or else I'll do a separate. I'll just save this and then separately do remaining rest all. Yes, let's continue the discussion on different types of entities revision. We already completed societies audit and government audit. Now we are having few other pending topics discussion, which are all quite easy. Now let's begin first the discussion of local body. Local body discussion. You know, what is a local body? It's a unit of local self-government. Generally, we find it in urban areas. Okay, but here the context of local body discussion is in all angles, urban, everything. So local self-government, local body is nothing but local self-government, where administration is by some representative body, where they have some autonomy, where they raise revenue via local taxation for local services. Typically, municipal corporation, municipal councils, notified area committees, these are all popular local bodies. They do regulation, they do maintenance of the city and all that particular towns and developmental activities. General administrative expenditure, public health and safety expenditure, education and public works. These are the broad expenditures of a particular local body, and their revenue are property taxes, octroi and other taxes, and specially government grants. They get from state government some grants. Sometimes central government also will give a grant to a particular local authority. Next, what is the financial administration of a local body? First, they will have something called budgetary procedure. Okay, so in exam this itself can be asked as a question. Now, budgetary procedure ensures financial accountability and expenditure control. Funds raised or spent as per the rules and authorizations made for that particular local body. Budget determines taxation or expenditure. There is no strict revenue or capital split like in local body expenditure. There is no capital expenditure, revenue expenditure. That kind of split won't be there. Okay, special funds and budgets will be there for various projects. And expenditure, the way expenditure is controlled in local body is different from the state government and central government. You know, external audit by state government is the main instrument. Like how local body expenditure is being controlled by monitoring through the audits by state government. State government directly do the audit. That itself is one of the major control mechanism. And the accounting system is often complicated, inadequate or excessive information, not supportive of management information systems. Like local body accounting system is a bit complex. Next, objectives of local body audit. You know, these are the objectives: fairness of financial statements, assessing financial controls, ensure compliance with requirements, verify value for money, detect errors and frauds. You see, totally 5 objectives were there. And even when you're doing audit of local body, the auditor has to report on the same. The auditor also has to report on the same. Like, you know, what are the auditor's concerns? Exam they'll ask you what auditor has to report on, or what auditor's concerns in case of local body audit. Same, fairness in financial statements, controls, compliances, value for money spent or not, and fraud detection. The same objective, verify value for money, nothing but propriety concept. So the same objectives are the concerns of the auditor. On the same thing only auditor will be reporting. Next, so state government will do control via appointing the auditor. Some large corporations, no, they appoint the auditor on their own. For example, Mumbai Municipal Corporation, they have their own auditors appointment powers. Then what is the audit program? Audit is a financial control. You know, internal audit, it is conducted by own staff continuously. External auditors rely on internal audit reports also, and they use it. They conduct a detailed checking if at all internal audit is not existing, and they focus on efficiency, economy and effectiveness, and also proprietary elements. Next, audit program. Okay, audit is being conducted by local fund audit wing or some external auditor who is appointed. Ensure expenditure is conforming to laws. Ensure that it is authorized. Ensure that a proper provisioning happened. Assess performance of the scheme for knowing their results, how they are effective, and economy. how the project has been performed. These are the audit program, and these are the points which are covered in audit program. So this is nothing but local body audit. So we have completed totally 3 parts in this. So one is government audit, society audit, and local body audit. Now audit of NGO. See, NGOs are nothing but what? Mainly these are all non-profit organization which raise funds from donors, members, contributors for social objective. Legally, NGOs will be incorporated like societies, trusts, Section 8 companies. There will also be some registration requirements under income tax law, Foreign Regulation Act for foreign donations especially, and like religious organization, charitable trusts like CRY, UNICEF, all that. And is NGO registration mandatory? Generally not required. However, if at all that a particular society is having immovable property worth more than 100, this is as per trust act long back, okay, that compulsorily has to register. And Section 8 companies, they all have to maintain on accrual. Others, they can maintain on accrual or cash basis. Next, what are various sources of funds? There are 2 sources, main sources: grants, donation, fundraising, fees, subscription, gifts, all this. Sale of some books, stuff, all that. Social objective. Application: establishment cost, office and administrative expenditure, maintenance expenditure, programs expenditure, and this NGO will give donation to some other NGOs. Charities and donations by the NGO. Then promoters contribution. Promoters contribution is one of the major source of grant for local NGOs. Like capital receipts includes corpus contribution, revolving fund. Okay, like capital fund means this is for a specific purpose. Revolving fund means this can be used for day-to-day running purposes. Donations and grants received to acquire a specific asset, and sometimes NGOs also receive something called non-monetary donation like assets, all that. Audit of NGO. Appointment obviously by the management, but in case of Section 8 company, at AGM members will appoint. Statute requirements: under Companies Act it is compulsory. Okay, under income tax also a society has to, a charitable institute has to get their books of accounts audited to get exemption under income tax. Then audit reports for specific statutes. FCRA mandates specific format of audit report which has to be filed with the ministry within 60 days of financial year close by May 30. And audit planning and consideration: when you're doing audit of local body, what point you should consider while planning the audit? This itself can be asked. Understand the mission and operations of the of the NGO. Look at the statutory updates. Legally review the MOA, AOA, policies and guidelines, accounting systems, materiality, reporting plan, experts, and prior audit reviews. All this you should consider when you are planning the audit of an NGO. Next, audit program of an NGO. See, audit program is different, planning is different. Program means what are all you need to verify. You need to verify all assets, liabilities, income, expenditure are properly verified or not. They are key checks: corpus funds, donor letters, investments you see. Earmarked funds, donor and scheme rules you check. Fixed assets, see how when they were acquired, depreciation, title, ownership. Investments, are they maintaining registers and have they been approved or not? Cash in hand, if possible do a physical verification. Bank balance, reconciliation, inventory, program and project expenditure, establishment expenditure. Audit of receipts, verify contributions or grants. Internal controls, membership fee, are they maintaining registers or not? Subscription, registers check and reconcile with the counterfoils. Interest or dividend, look at the investments register and see whether corresponding interest and dividend is recognized correctly or not. Clear? The entire that how big that NGO we simply gave without missing that essence of the understanding. Next, actually I've seen yesterday I've seen certain charts which are circulating, like I just want to go through once. Till now I have not seen. Then I saw the charts, they were completely like misguiding. It's completely missing the matter. Like if you read the chart, there is no purpose. You remember only headings, you don't remember matter. In exam, for matter is what the marks is. Yes or no? For matter, all the key points, everything. Headings, if you write, you won't get marks. First of all, in IC book, headings won't be there. Only we give headings. So in the suggested answer, paper validation, they don't know whether it's a heading or not. I saw some 100 pages chart, 120 pages chart. Everywhere headings are missing. They focus on how to remember mnemonic codes, all that. But it's not possible, right? Like 99% of the students, mnemonic codes won't work. Still, that's a trend. They give some keyword and then mnemonics will be there. Like many feel that if I remember that code, I'll remember the provision. They will remember, but some other abbreviation they'll remember, not the actual one. And they give so much of time to these abbreviations, so much of time, where they forget the main theme of the the concept, they only remember the headings and side headings, and they don't know what to write in the only way to write this entire answer properly is multiple revision. 3 revisions, maximum 3 revisions. One time when you're watching the class, that's once, that's first preparation. Watching the class is preparation. Then 3 revisions if at all possible. First one should be extreme qualitative. The first revision takes at least 40 to 50 hours of time. CA inter audit, I'm telling 40 to 50 hours of time. Second and third revision, second revision takes some 25-30 hours. Third revision takes only 10 hours, 10 to 15 hours. Again, day before exam you revise. And if somebody who followed this particular pattern, they obviously can get exemption. Almost many students with whom I interacted, where they scored exemption 70 plus, 80 plus and all, this is what the formula they followed. You get more command the more you revise. Some students know what they say, they say like, sir, I literally revised audit subject 25 times. Like I'm writing from past 10 attempts. Every attempt I'll revise 2 to 3 times. So totally 25 times. So how many revisions is not dependent upon from the date when you started studying CA Inter. It depends upon for that attempt how many you did. Because every attempt is a fresh for you. You will forget everything. Maybe you remember little conceptually, but you forget everything. Every attempt is a fresh attempt according to me. So for that attempt, how much effort you put, that is only decide. It only decides. So 3 revisions you have, preferably if possible. You need to find time. There is no other option. You have to find time. Next. Then can I? Yes. Then audit of sole trader. Sole trader means what? First of all, a sole proprietor concern is not required to get their books of accounts audited. But often we go for audit. Why? Because of bank requirements or some other requirements. Appointment. Proprietor himself appoint. And incoming auditor must communicate with previous auditor. Here also, if at all sole proprietor already has a previous auditor, it is better you communicate. Yes or no? It is better you communicate. Next. Scope and conditions determined by proprietor, because what is the terms of engagement are mainly decided by proprietor. Full or partial audit he may do. He will exclude certain points. Responsibility for financial statements also might be given to auditor. But if at all sole proprietor is asking us to prepare financial statements and also do audit, different partners have to do that, just to avoid self-review threat. See, it's a matter of contract. It's not any legal one. It's a non-statutory work, so you can do that. Next. Yes. Contract of appointment. Obviously, the appointment must be in writing, which should define scope, limitations. If not, auditor should send an engagement letter to the client and get a confirmation. And the advantages are something similar to partnership form. Now we will discuss about partnership form, all that. Before partnership, now first I will discuss LLP, which is most important. Okay, LLP. LLPs are governed by LLP Act. They will have both features of a company and partners. Minimum 2 partners are required, where the minimum 2 partners should be designated partners. And small LLPs, where capital contribution is not exceeding 25 lakhs aggregate, or turnover is not exceeding 40 lakhs. Yes or no? If any of this is crossing, then that is not a small LLP. See, actually small LLP, the wordings are not there. We gave it as small LLP. Are you getting it? So you know what? The small LLPs, they are exempted from audits. If capital contribution is less than 25 lakhs and turnover is also less than or equal to 40 lakhs, then that LLP is exempted from audit. If any of this is breached, then that LLP is liable for audit for that year. Understood? Next, audit requirement. LLPs with turnover or capital contribution exception exempted. Generally, audit is mandatory for LLPs, but exception when turnover is not exceeding 40 lakhs or capital and actually you see here, you need to interpret as and nothing but. Okay, and the capital contribution is also less than or equal to 25 lakhs. Getting it? Then audit is exempted. Partners may voluntarily decide to audit. 1 minute, just let me have, I think both the conditions have to be satisfied, I guess so. It's not just one, I think it's both the conditions have to be satisfied. Just 1 minute, we'll cross check. Yes, we'll see here once. The accounts of every LLP shall be audited in accordance with the rules. That is the main provision. Exception, provided that an LLP whose turnover does not exceed 40 lakhs or whose contribution does not exceed 25 lakhs shall not be required to get its audited. Indirectly, if both are not satisfied, only audit is mandatory. Audit is mandatory when, for example, audit is mandatory when if turnover is crossing 40 lakhs and contribution is also crossing 25 lakhs, audit is mandatory. Yes or no? If any one of this is not crossing, audit is not mandatory. Indirectly, that's how it is coming meaning. Yes or no? Because they have used the word or. So LLP, it does not, provided that LLP whose turnover does not exceed in any year 40 lakhs. Suppose my LLP turnover is less than 40 lakhs, or my contribution is also less than 25 lakhs. If both of these criteria are satisfied, I don't have to go for audit. Yes or no? If any one of this is exceeding, automatically the exception does not apply. So naturally audit is applicable. So in exception, any one criteria if you satisfy, any one criteria if you fail, automatically audit becomes applicable. So here, though it is or, you need to interpret it as and. That's it. Fine. This is not a big deal basically. Okay. Next, returns to be maintained. What they need to maintain returns? They need to file ROC within 60 days from the end of the financial year, an annual return. And they should also file a statement of accounts and solvency, which is to be submitted 30 days from the end of the 6 months of the period. This is nothing but, suppose if your financial year is 24-25, okay, 6 months means, for 6 months from the end means what? 30th September 2025. From there, 30 days time, nothing but 30th October 2025. Very simple. After March, next October 30, that's the due date. Okay, yes, after March, next 30th October, that's it. Then books of accounts, they must maintain all the records of money received and spent, assets and liabilities, all that. Authority, who will appoint the auditor? DP, designated partner, appoint the auditor. If at all designated partner fails, other designated partner, if at all fails, other partners will appoint. Time limit, first auditor shall be appointed within 1 month of the registration. Subsequent auditor will be appointed 30 days. Subsequent auditor will be appointed 30 days prior. Yes or no? Prior to your end. Nothing but I told you, February end in our class also. Advantages. Refer advantages of partnership firm, we'll see there. Above partnership firm audit is a reporting. Auditor must report on correctness and reliability of record, information and explanation obtained or not from the partners. Are there any restrictions imposed on the auditor? These are the 3 points which specifically the auditor has to report on. Next, auditor's duty, obtain written instructions like through engagement letter, refer to minutes book, refer LLP agreement for understanding business nature, capital how much, interest how much, drawings how much, salaries how much, borrowing powers how much, partner rates how much, settlement methods. Understood? Next, special points in an audit of LLP. Appointment letter must be signed by a normal partnership firm. Appointment letter must be signed by authorized person. You need to read the review to know the policy decisions. Look at any partner interest in some other companies, all that. Partnership deed, see that it is signed by all the partners and review details. And business authorization, ensure activities are aligning with the partnership agreement. Confirm division according to the agreed ratio, whether partners are distributing profit or loss as per agreed ratio. See whether books of accounts are reliable. See whether provisions of tax have been complied. And matters to be considered before audit, same like LLP, these points. Advantages. The partnership audit advantages, LLP audit advantage, sole proprietary audit advantage, partnership. It will help us to settle legal disputes. It is reliable especially for dissolution, retirement and death of the partner, settlements. Audit accounts are trusted by banks for loans. It is useful for negotiation at the time of admission of a new partner. It also, audit helps, it's a safeguard against sleeping partners, undue, so that working partners don't take undue advantage of non-working partners. Yes or no? Especially for inactive partners, it's a safeguard. That's it. So this is audit of LLP and partnership firm. Understood? Then audit of charitable institutions. First, understand how it is constituted. Society, trust, company. Verify compliance with law. Legacies and donation. Verify papers, minute books, all that. Rents. Verify amounts due, all that. Then subscriptions. So charitable societies receive subscriptions and donation. Check receipt books and what are the controls over unused books. Agree collections with records. Acknowledgements will be there, cash books will be there, all that. Examine controls on collections. Ascertain changes in subscription amounts. Like generally, this charitable institute will run certain services like yoga classes, like that. So for that, people will subscribe. So there will be a changes in subscription amount, changes, all that. That's what. Next, investment income. Ideal money they will be investing. So verify whether dividend or interest with counterfolios. Look at investment schedules. Physically inspect securities. Investigate non-income generating items. Check dividend receipt for, is it ex dividend or cum dividend, depending upon that. Special features. Vouch gross receipt expenses, verify ticket proceeds. See whether any tax refund is there. Expenditure. Grant payments. Ensure for charitable purpose or within the objective. Verify no trustee, director or member is benefited from the grants given by the institution to somebody else. Verify securities or inventories through inspection, physical verification. Check cash and bank balances. Confirm funds for special purposes or utilized appropriately. Then audit of education institutions. In this, the most important thing is directly audit of fees received from the student. Only this one. You don't have to touch any other one because remaining all are same. Remaining all are same. Expenditure part we will see, and audit. Audit of fees received from students. How to audit fees received? Verify students' fee register with class register. Match receipts with cash book. Confirm that all the fees collected from student is accounted for. Check fee carry forward. Sometimes students will pay fees for 2-3 years together. The arrears are written off. Check admission fees credited to capital fund. Confirm authorized free studentships or concession. Ensure internal checks for demand. Verify fines levied. Check hostel dues recovery. Report old heavy arrears and ensure that caution money shown as liabilities. Easy. Next. Expenditure. Verify all expenditure is sanctioned properly by a proper committee or not. Check establishment expenses. Verify salary increases. Are they sanctioned and documented any decisions? Ensure proper authorization for bills and all. Then patients, hospital audit of patients, register of patients. Verify with bills. Check bills with attendance. Ensure all patients are billed properly. Yes or no? See the cash collections with receipts, bills, counterfoils. And here there are no other. Yeah, internal check. Review checks for stores, medicine, linen, instrument. Ensure that all these purchases and issues are authorized. Rest all other points are common everywhere. Audit of a club. Club, no, they will have entrance fee. Verify receipts with applications, counterfoils. Vouch with counterfoil subscriptions. Register of members will be there. Reconcile total due and how much is collected and how much is outstanding. Suppose if any arrears are there, confirm whether they can be carried forwarded. Verify current arrears and advances. Check register of members for arithmetical accuracy. Irrecoverable member dues. Identify arrears. Confirm recovery effort. Report irrecoverable amount through audit report. And see how much they are charging for foodstuff, drink and services to the members. And for non-members, we generally charge higher amount. Yes or no? Member account. Trace debits from subsidiary registers to confirm amounts are recoverable. Generally, whenever we serve any food to the member in a club, we will debit to his account. Means club has to receive it. Next. Margins. Vouch purchase of food, drink items. Test sales price for normal gross profit. Physically verify unsold stores and all that. Management powers. Examine secretary financial powers. Report excess. If at all, report to the committee if any excess power utilization is there, fraud or any error is there. Then audit of cinema. Audit of receipts from show collections. Only this part is important. Verify that entrance to the cinema hall is only through printed tickets. See the tickets are serially numbered. See that they are bounded into books. Different series were there for different shows in class. Advance bookings and all you need to pay special attention. Proper ticket of inventory, proper inventory of ticket booklets maintained or not. Olden as this is. Okay. Audit computerized ticketing system for reliability. If at all the cinema theatre is issuing through computers, see the system reliability. Ensure proper show statements and cash is tallied. Vouch cash book with statements. See that the cash is deposited in the bank on the next day. Ensure free passes are authorized or not. See how much entertainment tax paid and how much is the amount collected. Both are percentage apply on the amount collected and see entertainment tax paid correctly or not. That's it. Then expenditure, especially in this, examine unadjusted advances to distributors. So movie theater, when they take a film, they pay advance and then get the film rights. Okay, and once film is over, they will, they will get back some advance, some portion of advance. Okay, next, vouch film hire payments with the distributors. Confirm depreciation on machinery and furniture is higher than usual rates. Yes or no? Then verify advertisement, repairs and maintenance expenditure. Verify electricity and see is there. Calculate provision for irrecoverable advances if the movie fails. Distributor sometimes may not refund the excess money which the theatre owner deposited. That one. Next, restaurant income. That is one more special income. Yes or no? Verify charges collected, advertisement slides and advertisement. This is advertisement. Restaurant. Inquire arrangement for share of restaurant income. Check accounts if restaurant is run by the cinema theatre itself. Audit is like similar to audit of clubs. where food and beverages is audit is done. Verify other incomes like parking, display windows, all that. That's it. Audit of hire purchase company. Hire purchase means what? Agreement to hire goods with an option to purchase. Possession delivered, payment in installment, ownership pass on final installment. Hirer can terminate anytime before the ownership. Now audit procedure. Ensure that the agreement is in writing. Mainly you need to verify agreement details like what is the hire purchase price, what is the cash price, when it will start, what is the installment, so no, how many number of installments, amounts, due date, where is the payee, where is the location of the asset, description of the asset. Then ensure that installments are being recovered regularly. That's it. Next, audit of leasing entities. We know there are multiple types of lease. Finance lease, where substantial risk and reward will be transferred. Ownership transfer, purchase option at low price. Lease term covers major part of the life. And present value of payments is approximation of fair, that itself is fair value. It's approximately fair value. Accounting, it is treated like a loan. Asset is on the lessee's balance sheet. Lessee can claim interest and depreciation deduction, yes or no? Operating, where it does not transfer substantial risks and rewards. So finance lease process, lessee, he will first decide what is the SS. Then lessor orders the asset. Yes, agreement is signed. Lessee pays the rentals or maintains the asset. End of the lease, asset is returned, or purchase option will be there, or renewal will be there. That is called open-ended lease. Next, auditors. Verify object clause of the leasing company. SS, lessee's credit worthiness. Examine lease agreement details like who are the parties, what is equipment, location where, tenure of the lease, payments, late charges, return clause. Subletting is prohibition. Generally in most of the leases, when we lease, subletting is prohibited. Sometimes it is explicitly permitted. Review. Review proposal, retain invoice. Review proposal means nothing but lessee will propose the form. Review proposal form we call it as. Review proposal form of the lease proposal form. Check board resolution, confirm insurance copies. Next, audit of hotels. In audit of hotels, room sales and collections. Verify room charges with the guest register. Reconcile sales with bills. Verify crediting customer bills correctly. Ensure timely payment or billing. Verify restaurant bills. Compare occupancy rates. Analytical procedure. This is nothing but analytical procedure. Check compliance with statutory or foreign exchange regulations. Next, internal control. Ensure proper control is there on cash receipts or disbursements, purchases or stocking, customer billing, recording or custody of edibles. And sometimes they will get income from travel agents. Ensure it is recovered. Verify commission payments. Inventory. Ensure proper documentation or transfer and ensure that they are in the locked areas. Verify physical, do physical inventory verification. Verify control over consumables and assets. Hotels will also have some receipts from function halls. Verify special receipts from auditorium, banquet halls and shops. Then that's it. No special points. Then here there is something called audit of trust and society. This point is irrelevant because trust means you write charitable trust answer. Societies means that answer only. Charitable institution answers. Here specifically once again they give which is not relevant. Generally for trust and societies, how to do audit. That's what they covered here. That's it. With this, entire different types of entities is completed. Okay, almost we spent close to 1 hour on this chapter.